Hello everyone, you're welcome to my channel Promotion for Sure. In this video, we are going to talk about Chapter 7 Role of EXIM Bank, RBI, FEDAI and others in International Banking Module A CAIB Bank Financial Management. Now in this chapter, you're going to learn and understand the role and functions of EXIM Bank, Reserve Bank of India, FEDAI and other relative agencies in the development and control of international banking business. Let's first talk about EXIM Bank role functions and facilities. Now, the EXIM Bank of India was established in 1981 under the Export-Import Bank of India Act 1981, an act of parliament as the principal financial institution for providing financial assistance and services for coordinating the function of institutions engaged in financing of export-import trade in the country, especially on a long-term basis. It arranges line of credit to other government for promoting exports of goods made in India. The functions and operations of Exim Bank evolve around following philosophy: to make India's export internationally competitive, to develop alternate financing solutions, to provide data, information, and advice for new export opportunities to Indian exporters, to provide selective production, marketing, and financing for Indian products to make them internationally competitive, to respond to export problems of Indian exporters and pursue policy resolutions. Now, presently, Exim Bank offers the following financial products, which is buyer's credit, corporate banking, line of credit, overseas investment finance, project finance, etc. Now, other services which are provided by Exim Bank includes consultancy and technology services, overseas investment finance, import loans, international merchant banking services, export marketing fund, product liability insurance, export vendor development lending program. Now, these are some of the facilities which is provided by Exim Bank. Now, Exim Bank line of credit is for the other countries as well. Now, Exim Bank grants line of credit to government of other countries for supporting their development plans, which allows Indian exporter to get instant credit from Exim Bank. It's a good service. Now, Reserve Bank of India and its role, exchange control and regulations in India. Let's talk about it. Now, to control and regulate the foreign exchange reserves and policies related to international trade, inflow, outflow of foreign exchange, as also has supervisory power of the persons authorized to deal in foreign exchange. It has the responsibility of maintaining the external value of rupee and can thus issue instructions on the subject of exchange control from time to time. Let's talk about FEMA regulations. As per Section 11(1) of FEMA 1999, Reserve Bank of India is empowered to issue any direction with regard to making payment or doing or desist from doing any act relating to foreign exchange or foreign security for the purpose of securing compliance with the provision of FEMA. Now, this is important. Foreign Exchange Management Act 1999 was enacted by the Statute of Parliament and was brought to force on 1st June 2000. The Act is applicable to all transactions in foreign exchange undertaken in India or by person resident in India. Earlier Foreign Exchange Regulation Act 1973, FERA, regulated the area of foreign exchange. Now, the objective of FEMA is to facilitate external trade and payments and to promote the orderly development and maintenance of foreign exchange market in India. While the objective of FERA was to conserve the foreign exchange resource for the country and ensure proper utilization of the for the interest of the economic development of the country. Also under FEMA, any violation of the provision of the act is to be dealt under civil laws. However, under FERA, it was dealt under criminal law. So you can say FERA was very harsh, very strict law. So it was more of a draconian legislation. So FEMA is a much better, comprehensive, and a well laid out law. Now, important provisions of FEMA: Reserve Bank of India has powers delegated under FEMA to issue guidelines, call for reports, data, and also impose penalties for violation of provision of FEMA. So limit of 2,50,000 per financial year under liberalized remittance scheme for residents. There is also various provisions for foreign travel. For example, withdrawal of exchange of travel to Nepal and Bhutan is prohibited. Payment in rupee of purchase of foreign currency may be done in cash. In case of rupee equivalent exceeds 50,000, the payment should be made by cross check. A person resident in India can possess or retain foreign currency note up to US dollar 2000. While selling foreign exchange to travel abroad, the passport of the traveler need not be endorsed. The traveler should surrender the unspent foreign exchange within 180 days from the date of return. These are some of the provisions regarding this new rules. Now, FEMA also allows resident to make remittance for the following purposes such as gift remittance, donation, subscription to magazine periodicals, consultancy services, international debit card, credit card, ATM card. This is an important information. Now we'll talk about foreign currency accounts in India. Exchange earners foreign currency. Now resident person, companies or firms can open and maintain EEFC account, exchange earner foreign currency account, for the purpose of transacting foreign exchange business. Every recipient of foreign exchange is allowed to retain 100% of the amount in a foreign currency. This is a non-interest bearing current account and there is no restriction on withdrawal in rupee out of balance held in EEFC account. Now, resident foreign currency account. Now, returning Indians who were non-resident earlier and now returning to India for permanent settlement are permitted to open a foreign currency account with any authorized dealer to keep their foreign currency assets held outside India or any other monetary benefits from the employer outside India. Resident foreign currency domestic account. A person resident in India is allowed to open and maintain a resident foreign currency account with the authorized dealer out of the foreign exchange required by him in the form of currency notes or traveler checks while on a visit to any country outside India. Now, diamond dollar account is also for diamond exporters. The facility of open diamond dollar accounts has been granted to diamond exporters. So, this is also a very good initiative. We have already spoken about FEDAI, but we'll again get a brief information about FEDAI. Now, a self-regulatory organization, was formed in August 1958 with the approval of Reserve Bank of India to take over certain functions undertaken by the Exchange Bank Association operating at Mumbai, Kolkata, Chennai, Delhi, and Amritsar. Its main activities include framing of rules governing the conduct of interbank foreign exchange business among banks, with public and liaison with RBI for reform and development of forex markets. Some of the functions of FEDAI is to provide guidelines and rules of forex business, training of bank personnel in the areas of foreign exchange business, accreditation of forex brokers, advising, assisting members in settling issues, matters in their dealings, represent member banks on government, Reserve Bank of India, other bodies, announcement of daily and periodical rates to member banks. Now, FEDAI rules has formulated various rules for conduct of foreign exchange operations by authorized dealers with an intention to have uniformity in dealing and ensuring a level playing field, particularly during the initial years of the developing market. Now, normal transit period is the concept of normal transit period and notional due dates are linked to the concessional rate on export bills. So, this chapter is quite informative and most of the things are repetitive. So I hope this would have certainly given you a good knowledge and information. And if you like this video, you can click the like button, subscribe to our channel, and share it on social media. Help us to spread education in this beautiful world. Thank you.